The $15 trillion flash crash that rigged gold and silver in 90 minutes. In the time it takes you to watch a movie, $15 trillion was just wiped from the financial system. It happened in only 90 minutes. A quiet Friday afternoon turned into a war zone. Gold, silver, Bitcoin, all of it just vaporized. The so-called experts are calling it a flash crash, a glitch, a black swan event they're blaming on a slow weekend and some bad news. But while the paper price of gold and silver was being systematically torn apart, something else was happening, something they are definitely not telling you about, and it proves this was no accident. So, was this the system finally breaking under its own corrupt, debt-filled weight? Or was it the biggest, most audacious financial heist in modern history? More importantly, what's going to happen on Monday at 9:30 a.m. when that opening bell rings? The answer is going to determine the next decade of your financial life. This wasn't a crash, it was a capture, and tonight we're showing you the proof. Let's be crystal clear. $15 trillion didn't just vanish. Wealth like that doesn't just evaporate, it gets transferred, it gets captured. What we all just witnessed was the single largest movement of capital from the hands of the many into the pockets of a select few, and it was executed with military-grade precision. The mainstream media, in all their wisdom, will tell you that markets were simply repricing risk. They'll blame profit-taking, a hawkish Fed nominee, and some geopolitical drama. They are either lying to you or they're financially illiterate. You can decide which is worse. This was what's called a 10 Sigma event, an event so rare it's only supposed to happen once every few billion years. And yet, we seem to get these impossible events every few years in our markets, don't we? The system isn't broken. It's working exactly how its architects designed it. This was a classic engineered liquidation event designed to flush out the weak hands, scare the hell out of retail investors, and consolidate power. The single greatest piece of evidence isn't in what crashed, but in what didn't. While the paper markets in New York and London were a sea of red, a completely different story was unfolding on the other side of the world. The premiums on physical silver in Shanghai didn't just go up, they exploded, soaring between 43% and 50%. Let that sink in for a second. At the exact moment the digital price of silver was being smashed to its knees, the price to get your actual physical hands on the metal went parabolic. This is the great disconnect. It's the war between paper and physical. The paper market is just a casino of leveraged bets, futures contracts, and algorithmic warfare. The physical market? That's the real world of supply and demand. When one market is screaming that an asset is worthless and the other is screaming that it's priceless, you aren't watching a crash. You're witnessing a crime in progress. The question isn't if the market is rigged anymore. The question is, who pulled the trigger and why now? To understand what's coming next, you have to understand how this heist was pulled off. This wasn't chaos. It was a symphony of destruction, and it was played in 4 parts. First, the setup. They laid the groundwork on Wednesday, January 28th. The CME, the Chicago Mercantile Exchange, where these futures are traded, made a quiet but devastating announcement. They were hiking the margin requirements for silver futures, raising the cash needed for a single contract from $25,000 to a staggering $66,000. To the average person, that's just meaningless jargon, but to anyone leveraged long in the silver market, it was a death sentence. It meant traders, especially the smaller guys, had to come up with more than double the cash or be forcibly liquidated. They were backed into a corner with no way out. The CME didn't just light a match. They soaked the entire room in gasoline and waited for a spark. Second, the trigger. With the market perfectly primed for a fire sale, the architects of this event just needed a cover story. It came in the form of Kevin Warsh's nomination for Fed chair. Warsh is known as a hawk, Someone who would shrink the balance sheet and pump up the US dollar. And a stronger dollar is pure poison for gold and silver. It was the perfect narrative. The algorithms and high-frequency trading bots, all pre-programmed to sell metals on dollar strength, were unleashed. This wasn't a reaction. It was a pre-programmed demolition. The selling began. This brings us to the third and most brutal act, the execution, the flash crash itself. On Friday afternoon, during the thinnest trading hours of the week, the dam broke. Gold, which had been flying high at $5,600 an ounce after a 30% rally, was smashed down 15% in under 90 minutes, bottoming out at $4,917. But silver was the real target. It had just hit a generational all-time high of $121 an ounce. In less than 20 hours, it plunged 38%, a biblical fall we haven't seen since the Hunt Brothers Corner in 1980, crashing to a gut-wrenching $78. And the carnage didn't stop there. The crypto space, the so-called digital safe haven, got taken out behind the woodshed. Bitcoin, fresh off a new all-time high of $126,000, was dragged down 38% to $77,000. In a single 24-hour period, $2.5 billion in leveraged crypto positions were wiped out. This was the 10th worst liquidation event in Bitcoin's entire history. Ethereum fell 25%. Altcoins were decimated. The total value erased from the market wasn't 4 or 5 trillion. It was $15 trillion, a coordinated cross-asset demolition. And now for the final act, the proof. As silver hit rock bottom at $78 an ounce, right in the middle of the panic and forced selling, records show that J.P. Morgan, the biggest and most notorious player in the metals game, surgically closed 633 of their silver short positions. They had been betting on the price to fall. And at the moment of maximum pain, at the very bottom of the crash they helped create, they cashed in, they sold at the top, and bought back at the bottom, transferring billions from the accounts of liquidated traders directly into their own. That isn't trading, it's financial warfare. And what was the media talking about while all this was happening? The same old playbook. Look over here, not over there. The news was flooded with noise. Endless chatter about a potential government shutdown on January 31st, rising tensions with Iran, and Qatar, the first bank failure in over 7 months, a story that was mysteriously buried. They create a fog of war, a smokescreen of fear and drama, to give themselves cover for the biggest heist in a generation. They needed you scared of wars and shutdowns so you wouldn't look at the crime scene. So who lost all this money? It wasn't the institutions, it wasn't the banks. It sure as hell wasn't the hedge funds who were positioned for this. It was you. It was the retail investor who actually believed in the gold and silver story. It was the crypto enthusiast who thought they'd finally found an escape from this corrupt system. It was anyone who was leveraged, anyone who believed this game was remotely fair. They call you dumb money. They call your panicked selling capitulation. But you didn't have a choice. The margin hikes, the weaponized algorithms, the tidal wave of institutional selling, it was all designed to give you no choice at all. They needed your shares, they needed your coins, they needed your contracts, and they engineered a crisis to rip them away from you for pennies on the dollar. This is the final flush we've been talking about for years. A deliberate, controlled demolition designed to shake every last weak hand out of the market before the real move begins. The Great Reset isn't some distant conspiracy theory. You just lived through a small-scale version of it. They have to reset the board before they start the next phase of the game, and that means clearing all the other players off of it. The insiders, the smart money, they don't lose in events like this. They are the casino, they cause the crash, and then they use the money they just took from you to buy the dip. It's like selling someone a car with no brakes and then taking out an insurance policy on the crash. The game is, and always has been, rigged. But knowing the rules of their game is the only way you can turn it to your advantage. Because after the flush comes the rally. The only question is whether Friday was the end of the flush or just the beginning. This brings us to the edge of the cliff. The entire market is holding its breath for Monday's open. What happens in the next 24 hours will dictate the path forward. There are two very different possibilities here, two roads ahead. You need to be ready for both. First, there's the bear path, the road to total collapse. I'd put the probability of this at about 35%. In this version of reality, the selling isn't done. The liquidation machine is still hungry. It would start with the Asian markets on Sunday night. If silver and gold gap down again in Shanghai, it's a signal the paper contagion is spreading. The next domino would be Bitcoin. If it can't hold support around $77,000 and breaks below $75,000, it would trigger another, even bigger wave of liquidations. In this scenario, all the geopolitical noise gets real. Tensions with Iran escalate. Rumors of more bank failures become facts. This would trigger a mad dash for the only thing that becomes king in a crisis: cash, the US dollar. In that kind of everything bubble unwind, everything sells. Correlations all go to one. Gold and silver would get sold off right along with stocks to cover margin calls. That $15 trillion flush would just be the appetizer for a $30 trillion wipeout. But then there is the bull path, the path of the final flush followed by a violent snapback rally. We see this as the much more likely scenario, around 65% probability. In this reality, Friday was the climax. The weak hands are gone. The shorts, like JP Morgan, have cashed out and are now ready to flip long. The ammunition for the next leg up has been loaded. The first sign will come from Shanghai. If those physical premiums hold strong or even go higher, it confirms the paper-physical disconnect is at a breaking point. It shows the real world is ignoring the fake paper price. The next sign is Bitcoin. If it holds that $77,000 to $79,000 level all weekend, it tells us the worst of the forced selling is over. If those conditions are met and the geopolitical headlines cool off just a little, the stage is set for one of the most violent reversal rallies in history. With the leverage crowd gone and a new army of shorts piling in, the market is primed for an epic short squeeze. The manipulators, having bought back their shorts at the bottom, will now unleash a buying frenzy to punish everyone who followed them down. The snapback would be ferocious. In this scenario, silver doesn't just recover, it targets its old high of $121 and blows past it. A move to $120 by the second week of February isn't out of the question. The miners could double or triple in months. This is the greatest opportunity for those who understood what just happened and are positioned for it. The key things to watch are simple. The Shanghai open Sunday night, Bitcoin's stability above its support level, and the temperature of the news around Iran and the banks. Data doesn't lie. Elites do. We don't provide signals, we don't sell courses, we don't manage your money. We are here to dissect the truth and give you the objective data so you can become a sovereign financial thinker. The world is full of imposters selling you repackaged lies for clicks. This community is for independent thinkers only. If you're looking for hype, this isn't the place for you. But if you want to stay on the front lines of this information war and get the unfiltered truth before the mainstream spins it for the masses, your path is clear. Subscribe to this channel now and hit that notification bell. Join the few who refuse to be someone else's exit liquidity. To show you're part of this committed group, comment John CV down below. It helps us find the real thinkers in a sea of noise. And finally, if you believe logic and data are the best weapons in this fight, press the like button. Let's recap. First, This wasn't a market crash, it was a $15 trillion heist, done with margin hikes and algorithmic attacks to transfer wealth. It was a stress test, not a random event. Second, the war between paper and physical markets is at a breaking point. Exploding premiums for real metal prove the paper price is a lie. The spring is now loaded for a massive rebound. Third, Monday decides everything. We're at a fork in the road. It's either the end of the flush and the start of a historic rally or the beginning of a true systemic crisis. The board has been reset, and that reset overwhelmingly favors the bulls who survived. If you were over-leveraged, you were just taught a brutal lesson. If you are positioned correctly, with a clear head and a map of the game, opportunity isn't just knocking, it's breaking down the door. Do your own research. Manage your own risk. The board is set, the pieces are in motion. Stay vigilant. Monday reveals all.